Good morning, everyone. I'm Vince Lansing. This is the Gold Fix Market Rundown. It's 8:18 on the 19th. We're going to be discussing two things today. We want to be focused on remembering Richard Nixon and the end of U.S. hegemony. Before we do that, I'd like to alert you to a piece that we're coming out with later this morning, possibly very important. We made some comments recently about a U.S. debt for equity swap as it related to what Scott Bessent had been talking about, the sovereign wealth fund idea, et cetera, et cetera. Well, we just finished a 1,600-word piece that answers questions that were asked and ties some concepts together. And that's tentatively titled The End of Free Market Capitalism and the U.S. Debt for Equity Swap. It will go a long way towards putting in perspective how crucial the next couple of years will be for the United States. If we don't figure this out, we will slide significantly. Anyway, that'll be out later this morning for premium subscribers. And we urge you to read it if you're interested in the path forward from here for the United States of America. There's the home page. We're going to be talking about lower right-hand side, August 15, 1971, the beginning of the end of U.S. hegemony. That's the title of a piece by Matthew Piepenburg. I think I'm saying his name right, von Greyerz. An excellent piece, especially because it has to be discussed. Every time this happens, it has to be discussed, and worth reading. We just sent that out free, obviously, to our subscribers. So let's take a look at the markets quickly, and we'll do that. 10-year yields are down 1. The dollar is 97.99, down 13. The S&P 500 is down a handle. The VIX is up a little bit. Gold's up $6. Silver's up 10 cents. 33.39, 38.10. Good. Copper is down a penny. WTI and natural gas are down. Bitcoin is down. Interesting news yesterday coming out of Strategy or MicroStrategy about their capital allocation rules. It means something. We're not sure what yet, but it means something. It means risk off for us. We sold some Bitcoin. Ethereum 4,300 down 10. Palladium up 15. Nice. Platinum up 22. Gold, silver unchanged, and grains are down with corn leading the bunch lower. Okay. To the main event. 54 years ago, on August 15th, President Richard Nixon stunned the world. On live television, he severed the dollar's link to gold, calling it a, quote, temporary, end quote, measure. But temporary never ended. Since that day, the dollar has lost over 99% of its value against gold, and U.S. debt has skyrocketed from $398 billion to more than $37 trillion. What followed was not stability, as was promised, but addiction to a newfound solution: deficit spending, currency debasement, and bubbles directed by the Fed that inflated and burst again and again, adding instability to the supposed framework. Each crisis was patched with more money printing, pushing the dollar further into decline. Today, the world has taken notice. Central banks are dumping U.S. treasuries and hoarding gold, elevating it once more as an ultimate reserve asset. The lesson is pretty stark. When money is backed by nothing, it eventually becomes worth nothing. And 54 years on, Nixon's temporary break may now look like the beginning of the end. That story is right there, and you can read it. Related post, RBC, 5 crucial observations on gold miners. I think it's a very important post, as RBC gave us points that were very industry specific. Very welcome to see that. Gold trading comes to Hong Kong. Part of the broadening of gold pricing dominance, China is, as we mentioned during the BRICS, opening uh, sponsoring and opening vaults so BRICS nations can hold their gold locally. And with that, with the physical comes the trading. Hong Kong doesn't want to be left behind. Hong Kong's a part of that. Hong Kong, Singapore, Saudi Arabia. You'll probably have one in Africa by the time this is over. Dubai, obviously. Um, Michael Every and Sunday, the founders discussion. That's a 3-hour piece. Let's move on. Housing starts at 8:30. It's 8:24 now. I don't think we're going to be on here 6 minutes from now. But there you have it. Again, the Fed Open Market Committee minutes will be released on Wednesday, and Powell will start talking on Friday. He may not start it right away. There's the story. We want to just finish with a little bit of color on that first item that we talked about. Just to give you a preview, the end of free market capitalism and the U.S. debt for equity swap. America faces a turning point, so to speak. The world is no longer lining up to buy U.S. treasuries. And without foreign capital, the options are blunt and simple. Tighten belts and risk depression, print money and debase the dollar, or grow out of debt by rebuilding industry. Treasuries have lost their aura of safety after sanctions and confiscation. The solution now is foreign direct investment, with Washington offering equity, guarantees, and state-backed partnerships. This marks the end of pure free market capitalism. You should have no pretense that we're in a free market capitalist society anymore. The U.S. is pitching the world a new deal. Exchange capital for a stake in America's next chapter. We hope it works. We want you to understand what you're getting involved in here. It may be necessary, but it ain't what you think it is. I'm Vince. Have a great day.